Welcome to Employee Benefit Plans and Business Sense.
Hello and welcome back to Employee Benefit Plans and Business Sense with Lank and Kathleen Salas of KLB Benefits Law Group. And Kathleen help employers and benefit plan service providers navigate the complex legal requirements of employee benefit plans. With decades of combined experience in employee benefits law, they guide clients through compliance matters, corrections, IRS, and DOL audits. I'm Lisa Mosbey, and today we're talking about required employee communications for 401k plans and what employers need to know about notices, timing, and delivery requirements. Welcome, ladies. Thanks for joining me again today.
Thank you for having us, Lisa.
Dal, let's start with what notices and information is an employer required to provide to employees about a retirement plan?
There's a lot. In fact, I'm going to use a little cheat sheet that I've written up to list them all. So forgive me for sounding like I'm reading, because I am reading. The list of things it goes on and on. There must be 6 different basic notices and half a dozen other possible notices. The main notice, the main preface for the whole concept of employee notices is, when you think about it, a retirement plan account for that employee is a huge savings, a huge asset for them. It's a huge part of their personal wealth. So they need information about it. They're not in charge of it. They interact with the plan, and they choose their own investments for their plan accounts, usually, if they're in a 401k plan. But they don't have any control over what's the plan administration. So they need information about it. So when you provide an employee benefit like a retirement plan, you need to tell your employees about it, and you need to tell them information about their account. So that the main disclosure that's required under ERISA is the summary plan description, which is basically a short document that describes what the retirement plan is and offers and how it works for the eligible employee. And then it's meant to be written in plain English too, so it's not supposed to be legal jargon. Sometimes they don't meet that exactly, but they're supposed to be understandable by ordinary people. So that's the summary plan description. We call it an SPD for short. And then any change to the plan that during the course of somebody's participation, that needs to be the summary plan description is updated with what they call a summary of material modification, or an SMM. So that just shows if there's been a change since that person first got their SPD. They will get that summary of material modification to let them know what the change is in their retirement plan account. And then the summary annual report is a description, a very brief description of the financial status of the plan that's issued to each plan participant. That basically it's based on the Form 5500, which is a public document. It's just a summary of all the plan's financial status. And then the benefit statements are the individual statements that go to each participant who have assets in the plan. They've got their savings and their investment choices. They're required to have benefit statements, just like a bank statement. The plan's required to provide them that. And in addition to those core statements, or notices, there's the fees, that the expenses for running the plan that are charged to a participant must be provided. A notice about what those expenses might be must be provided to the participant regularly, so that they understand what is being deducted from their plan account to pay for plan administration, investment expenses, etc. And then there's the final thing is a very important thing for most 401k plans and profit sharing plans where employees or participants select their own investments. If a participant fails to select an investment from the investment menu, the plan is required to provide a default investment in these situations. And the default investment is meant to be more robust than just like a money market account. So that notice, there's a notice required to tell participants, hey, if you forget or blow off choosing investments for yourself, the plan's going to choose one for you, and this is what you're going to get. So that's called the Qualified Default Investment Alternative Notice of QDIA. So these are basic information about the plan generally and about the specific account of any given participant.
And I would just add to that, for 401k plans where the participant directs the investments, there is also a lot of information about the investment options, the prospectuses and things like that that need to be provided to them so they can, theoretically at least, make informed decisions about their investments. These are so many different notices that Dolls mentioned. I'll just sort of have a little side note that if health and welfare plans have a lot of these same notice requirements, not all the same, but then because they're group health plans, they have a slew of other notices that are required for health and welfare plans. So um, that's an area that I practice in, and so I just thought I would mention that because it's even though both retirement plans and health and welfare plans are covered under ERISA, where a lot of these notice requirements come from, there's a little overlap, but they each have a lot of their own notices and information that has to be disclosed.
And Dal, when are all these notices required to be delivered?
The notices are required at least annually for investment-related notices, and there are other notices that are required for when a change is made. So the SPD, that core document that summarizes the plan for everybody, that's required to be provided within 90 days of a person becoming eligible to participate in the plan. So if someone gets hired, their waiting period lapses, they're finally in the plan, they get to enroll, they have to be provided that SPD within a few those 90 days after becoming eligible so that they can know so they know all about it, right? And then once they're in the plan, then you're an active participant in the plan. You have the investments, the account statements are provided to you quarterly. So once you start investing your deferrals or a profit sharing contribution or whatever you have that. It's like I said, a bank statement. Instead of being monthly, they're required to be quarterly, and at least one. Yeah, so they are required to be provided at least quarterly, and an annual statement needs to be provided to people to tell folks about those fees that they might be charged, if any, if what fees they are charged annually, so that they understand and are told about changes to fees too.
And this is a lot of paperwork. I imagine some companies, it causes so much causes it to slip through the cracks sometimes. What are the penalties for a failure to provide employees the SPD, the SMM, or fee notifications timely?
Yeah, the penalties are horrifying. I'm smiling because they're just ridiculous. But they are, for example, a failure to provide the SPD. Say there's a notice, for example, that if somebody is automatically enrolled in your plan, which is very common nowadays. If someone's automatically enrolled, you have to tell them, and if you fail to give them timely notice, they could be charged. The plan could be charged $2,112 per day, $2,112 per day, and each participant is considered a separate violation. So a person gets hired, becomes eligible, you happen to have an automatic contribution arrangement in your plan, you don't tell them this, you don't give them the right notice, and you could be charged if you were caught by the government in an audit, for example, this amount, that penalty of over $2,000 per day. It's a strange number because it's indexed, it goes up over time. And then there are often a lot of the per participant penalties are $120 nowadays in 2026 per participant for failure to provide a lot of different notices. There are penalties for many different things in ERISA. We've talked about the failure to tax qualification corrections and excise taxes and things like that. Well, this is yet another thing, and the point of this really severe penalty schedule is to incentivize employers not to blow this off. It's not a cost of doing business it's so expensive that you wouldn't say, I'm just going to budget for not giving notices. It's like, no, it's too expensive to budget for that. So what do? You give notices, and you try really hard. It's difficult to comply completely, but and in fact the penalties are not enforced with any particular rigor in a way to try to destroy an employer. And the government's doesn't seem to be interested in making a company go out of business out of charging penalties. What the government will do instead is require the employer to provide the notices. So if you got audited and you hadn't given a notice, it's more likely that you would just be told by the government, send out that notice, than actually have a penalty charged.
And is the like that $120 a day penalty you mentioned, Doll? There's a requirement that if a participant asks for plan documents, for example, they want to actually get not just that summary plan description, they want to actually see a copy of the plan document. Then they can get that if they ask for it and require in writing. But then that if the employer doesn't give it within 30 days, then that liability for that $120 a day sort of starts. And those kind of penalties are usually assessed by a court, and they don't usually do the full $120 a day. They'll usually do some other amount in that range. But a court can also get involved and assess the penalties.
Yeah, that's a good point. Kathleen brings up an excellent point in connection with the employee themselves. When you think about it, as I said, this being such an important asset of the employee's wealth, their retirement account, they they may be curious about things and ask the employer questions. They go to the HR department and they might want a copy of another copy of the SPD, or they might want a copy of the full plan document, which they have a right to. And the HR department or the employer may not charge a fee for providing a copy of these documents to the employee. But it makes sense that an employee, you don't, the employer should not want to irritate employees by blowing off these requests. This is, it makes sense that somebody who has no control over this money wants to know about it, so they ask. And the employee, it's good employee relations to communicate with an employee before there's a lawsuit. It just makes sense.
What communication mistakes do employers make most often with retirement plans?
I think that not keeping up with the requirements of specific, changes to the notice requirements. It's very dynamic. There's been changes in recent years, and a lot of employers might rely on their old concept, or their old calendar of notice requirements and timing, and not update it. So they should have really their point person in this matter is their third-party administrator. They have a third-party administrator knows this stuff and probably has resources available to the employer to refer to, their notice calendar. And the TPA, the third-party administrator, may actually provide notices too, if that could be a service. It's usually something that would be added. There would be an added fee for it. But whatever the third-party administrator does in connection with the notice, they know what's supposed to happen. And if it's the employer that's going to do it, they can advise the employer. And so the other mistakes that I really think that the ignorance is the problem. The employer just either thinks that the third-party administrator is handling it all, like not just aware of what the notices should be, but actually delivering those notices, and that's not usually the case. But so thinking that someone else is doing it, that's a mistake. And then not keeping up with the current required timing and content of notices. That's the second mistake, I think.
And if we have an employer who's listening today and they've discovered the required notices were not sent on time, how do they fix that? Will they automatically incur penalties, or can they actually take action to correct it?
Yeah, they can correct it. The penalties are not incurred automatically. What they should do is they should simply decide to direct some company resources to fixing this, not only in the moment, but for the future. Because as long as you have a retirement plan, you're going to have these requirements. So you need to communicate with the party that made you aware of the failure, of the problem. Is it your TPA that noticed this? An employee? Who is it who's telling you that they need to get information that they didn't get? And make sure that that party is satisfied that it's been addressed in the moment, right? Give the person their SPD or their benefit statement or investment, their fee notice or whatever's required. But then look at your systems as an in-house and figure out what do we need to do going forward. There needs to be it needs to be part of somebody's job description to in the HR department or wherever, to make sure that notices are sent timely. And so you have a compliance calendar, you have a way of dealing with the different notice methods, who is opted in, who has who has either affirmatively requested electronic delivery, who's opted out of electronic delivery and only wants paper notices. What are the paper notices that are required anyway? So, there's a difference between that you can do electronic delivery for many things, but not for every single thing. And there's just all those different nuances need to be tracked and kept in a central inside in the employer. You can't just say, "Oh, the TPA does that," you know.
And I would also add that it depends on the type of notice. Certain notices may have, it's failures of certain to give certain notices, like safe harbor plan notices, which are required to be given before the beginning of, like, at least 30 days before the beginning of the year in which there's a safe harbor matching contribution. Um, or the auto enrollment notice that Dahl referenced earlier. Sometimes, if those notices aren't given timely, then an actual correction, like monetary correction, might be required. So we talked in the previous episode about correcting plan mistakes. Some of these notices of failure will actually trigger the requirement that an actual correction be made, not just giving the notice. So I would definitely recommend that they contact their legal counsels to see if they need to do anything beyond giving the notice late.
I think it's helpful to have a plan committee inside the employer. If there's any bandwidth for more than one person to be in charge of this stuff, even if it's two, a committee of two, but just more than one person to be held accountable for all these plan activities, it really is worth the effort to have somebody, more than one person who are talking to each other about what the plan requires, year in and year out.
And
That's a
taking
great
that
suggestion.
fiduciary responsibility to keep an eye on things.
Sure. Those are both great suggestions. I think we have a minute here to tie this all together with an example. Do you have an example that comes to mind where an employee communication issue created a compliance problem? What happened?
Well, sure. I mean, they're usually combined with other kinds of failures, but I have seen miscommunicate. I mean, this is a kind of business situation that's common in lots of contexts, not just about notices, but there's situations where there's so many service providers touching a plan, and the investment provider, the third party administrator, um, and and the payroll company and the employer themselves. There's all those people involved in running this plan month in and month out, that if an employer assumes that any one of those other parties is in charge of something, and the other party either is in charge of a notice and has dropped the ball and failed to provide the notice timely, or wasn't in charge of providing the notice and no, that wasn't in our service agreement, and you, the employer, is supposed to be doing that. That kind of misunderstanding can create a lot of aggravation among in the relationship, right, between the service provider and the company. And I've seen situations where the service provider messed up on, say, a safe harbor notice, which can cost money, and they've paid damages to the employer for failure to comply with to timely provide safe harbor notices, after agreeing to do so, when, for example, they took over from a previous service provider, and now the new service provider agreed to carry on this process and did not. Then it actually incurs damages that they have to pay because it's their breach of their service agreement.
I was going to say, and kind of a twist on that is, a lot of times these third-party administrators will prepare the notice and then send it to the employer to distribute, and the employer just assumes that it's been distributed, and they don't realize that, whereas the third-party administrator has the responsibility to create the compliant notice. It's not the third-party administrators, they haven't agreed to do the distribution part of it. They give it to the employer to do, and the ball is often dropped in that situation too.
Wow. So many people involved in these transactions. I can see how these accidents or unintended consequences occur on a daily basis. Ladies, I want to thank you so much for sharing your insights and your experience, because you've seen all this happening. You know how to handle it and what the corrections are. So I hope that our audience is listening and reaches out if they need some assistance on this.
Thank you, Lisa.
Folks, thank you for listening to Employee Benefit Plans and Business Sense. If your organization sponsors a 401k plan and you want to make sure your employee communications are meeting legal requirements, visit klblawgroup.com to connect with Dahl and Kathleen. Be sure to leave a review, and share this episode if you know someone who needs it today. We'll see you next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.